Hello, everyone. This is Martin. Welcome back to another weekly forecast on what opportunities I am looking for. And we're looking at the week for November 21 to the 25th. And it's going to be pretty interesting for this week because over the last couple of weeks, we've had all the major currency pairs trending really, really well, led by the strength of the U.S. currency. And we've had opposite correlation on the on the currency pairs, and I'll explain what that means as we look at the individual currency pairs in just a moment when I open up the charts. But basically, the euro, British pound, Australian dollar, New Zealand have gone one way, and the opposite direction went the U.S. CAD, the U.S. Swiss franc, and the U.S. Japanese yen. So really interesting, and I'm going to have a really close look. But for this week, this is interesting. Caution: watch for possible reversals. Okay, and I can see that currency pairs are reaching pretty soon their support and resistance areas, and we could see some reversals in the opposite direction. And when currencies reach the support and resistance and start pulling back, we call that pullbacks or retracements. Okay, so we can watch out for that, and let's get on with our charts. Okay, our first chart is the Euro USD. This is the daily. We basically look at all the charts from a daily and 4 hour standpoint. But this is one pair that has been trending down, and you can certainly see that over the last couple of weeks. I mean, price has just gone down, down, down. And let me just move that a bit, and you can see we are in a downtrend. We are trending lower. We are in a seller's market, as the MACD indicates right here. The MACD is the blue line, okay? So we are in a seller's market. However, momentum is weakening to the downside. We are getting close to a support area, and we're looking at support of 105. 105, 105.20. Okay, so price most likely is going to come down a bit lower, and then as the theme of the week is watch for reversals or pullbacks. So one thing I do fear a bit is this Sunday, um, when the markets open for trading Sunday at 5 p.m. Eastern Standard Time, we usually get some pretty good gaps, and the gaps for this Sunday could be quite large. Again, possibly deceiving traders, so it could gap down to the downside, or it could gap to the upside. I don't really know, but the thing is, if you're hesitant, don't trade on a Sunday because of the huge gaps, and just be aware that we are getting close to the support zone right here. Okay, so if price comes down lower, you can target this area right here to the 105. 100, 105.20. Okay, now we come to the Euro US. I'm sorry, the British Pound USD. Sorry, my mistake. Okay, on this pair, again, this is a daily chart, and you can see what happened as of last Friday's close. Right here is this vertical line. This was last week. Price actually was going the opposite route to the other major pairs, but now is joined the pack. In my last video, I said that the British pound was not following its natural order, not following the euro, but now British pound is following the euro, following the same downtrend as the Australian dollar and the New Zealand as well. So um, we're heading down lower. I see the trend is lower. We are below the moving averages here. Okay, and there's a long way to go. If price is going to continue down, we've still got another 150 to 180 pips. So that's a pretty big open space. I always look at open spaces, and from this last price bar here on Friday, just before the weekend started, we have the open spaces from here to the previous swing low here, and also to this gray rectangle, which is designating support. Okay, so there's a long way to go. If price continues going down, there's a lot of pips to be made. You can see price broke a recent trend line. We are heading down. We are in, except watch this, the MACD on the daily chart has just reached the zero line. Okay, and we are heading into some resistance. Price may come down a wee bit lower, may not come down all the way here, may come back, go back up to retest back here. So it could come down, up, and then continue lower. So just keep that in mind. And for the British pound USD, we want to, like I said, we want to have a bit of caution, but you can sell below 122.90. So I would possibly not get in right away, but once price uh, goes beyond 122.90, which is right about there. Okay, let me just put that there. 122.90. So once price gets about here, then you can enter a trade. Then we mostly can be rest assured that price will be going down further. Okay, so right now though, just be a bit cautious because the MACD is heading into some turbulent waters right now. We may go down just a wee bit before price may pull back. Okay, again, let's take a look at the British Pound USD on the end of day um, trading chart, and you can see here price has not quite closed below the lower yellow line. And again, this is indicative that just beware that price may come back a bit first and then come back lower, or come down a little bit lower then come back up. So again, just beware of that. Okay, now we get to the Australian USD. Here you can see a massive move down. In fact, from the high over here on this pennant, you can see the pennant here. We've dropped. I mean, this pair has been one of the worst. The Australian currencies being one of the worst. Currencies 431 pips to the downside. I see continuing downside movement. You can see the open space from this candle, this black bearish candle to here. There's still room to move down lower. Let's take a look. There's room for another 110 pips or so. The average daily range, trading range, is approximately 9,900 pips. So it may make it, it may not make it in one fell swoop. It may come down a bit, go up and then down. But again, there is momentum behind the move, behind price. You can see the MACD right here. This is momentum. So it gives me good reason to believe that price will continue going down further. And we are definitely in the seller's market. I'm going to switch to a 4-hour chart. And again, you can see price just keeps coming down on the Audi USD. Momentum has kind of slowed down just a wee bit on the 4-hour chart. So again, we use the daily and the 4-hour chart if we want to just do end of day trading. That means taking a look at the charts at the end of the day, anytime between 5 and 10 p.m. in the evening, placing a trade, then walking away, closing your computer and taking a look at the at your trade results for the next day. But again, intraday could be very interesting. Again, you could do intraday trade in the evening. Again, staying at your computer for a couple of hours in the evening. Best time in the evenings are generally after the Tokyo market opens, which is 7 o'clock. So anytime from 7 to 9:30. Take a look 7 o'clock to 10 o'clock and look for some trading opportunities. Again, I believe prices going to be coming down. And for here, um, what we want to do is either wait to see if price goes higher, wants to pull back a bit, or take a or just wait for price to come below 0.7320. Okay, 0.7320. You can do that and just beware that support is back here. But again, there's a lot of open space to the downside. Okay, you can see here three massive candles on the daily chart. Um, and like I said, price can't keep going down forever. Remember, uh, with a huge volatile movement to the downside, price is then if going to turn around, and that's the theme for this week. So this week, for all the major pairs, watch and be careful that price could be turning around shortly once price reaches support or resistance. In this case, it would be support. Now, again, the Australian dollar is tied into the price of gold. I'll quickly put on the gold chart, and you can see gold has come down. Here's the daily chart for gold. So gold has come down quite a bit too, but it's also hitting a major key support area right there. Momentum has been decreasing to the downside, so it could possibly watch for a reversal bounce off the support. And if that happens, that means then the Australian currency will bounce back against the US in a pullback. Okay, now we move to the New Zealand USD. Again, same thing, huge massive move to the downside. Here's the red vertical line that shows you price from the close of last Friday, like last week. And from that, we had 5 days straight, um, going further down. The interesting thing is, take a look at this last candle. We have closed below the 200 moving average. This dashed red line is a 200. So price is closed above there. We can expect a little bit of a pullback maybe toward the 200 area. But we are in a seller's market, just as we are with the Australian currency, the British pound, and the euro. So they're all heading down further. We are definitely with the New Zealand. New Zealand has also been a weak currency, and you can see we are in a seller's market. The blue MACD line is below zero, indicating that we are in a seller's market. Price is below the 50. Price is also below the moving averages. Okay, and let me just move that. That is last week. I'm just going to just put that in. Let's get rid of this line. There we go. So that's nice and clear. So price is definitely moving down. It just depends on when you are going to get in. Okay. And next we get to the US CAD. Now, the US CAD has been going higher, so that there's an opposite correlation. So the US CAD, the US Swiss franc, the US Japanese yen, they're correlated in an opposite direction to what the other major pairs are doing: the euro, British pound, Australian dollar, and New Zealand yen. So this pair is going higher again, based on the U.S. strength. Worldwide, the news coming out of the U.S. is generally positive. The last speech that Yellen gave us indicated that there's going to be a possible rate increase in the month of December. So be careful, watch out for that. But that's going to propel the US currency higher, stronger. The other currencies that are trading against the US will go obviously the opposite direction. That means getting weaker against the US. Okay, so here you can see the open space. We've got quite a ways to go. Once price breaks this area right here, price still can go at least 140 to 250 pips, depending on where it ends up. So, with this pair, we are in a buyer's market. You can take a look at the MACD here. The moving averages are in a well-defined trend. The 8 is above the 21. The 21 is above the 50. I mean, they're all, even the 100 is above the 200. So they're all moving properly. They're all in the correct order. The moving averages, giving us strong evidence and indication that price is going to go higher. We had a bit of a pullback on Friday, but that doesn't mean anything. So just wait on this pair. Just wait. Don't take a trade right now. Just wait until price comes back a little bit further or finishes its pullback. Let's go down to the 4-hour chart. Okay, let's make that nice and clear. There we go. Okay, so you can see on the 4-hour chart, price is definitely in the pullback, and I'm going to draw a trend line. Okay, is a bit of a big tip. Price could, in fact, come back to here or back to here and then bounce higher. Once you see that bounce higher, you can get in, or you can just wait for this area right here, and that means buy above the 135.20. Okay, buy above 135. Let's just take a look here. 130, yeah, I would say buy above 135 520. Okay, and but wait for the pullback to end, then look for buying evidence to the upside. Right now momentum is to the downside on the 4-hour chart, so we've got to wait for that momentum to shift back again above the zero level to push price. Well, price has to first turn around, the momentum will push it higher. Okay, so that is what I see for the US CAD. US CAD is tied in to the oil, price of oil, and you can see oil has also rebounded higher. So oil was coming down, down, down. It's now rebounded off of the support. Here's the 200. So oil is going higher. I believe it's going to continue going higher, just a wee bit higher, until it reaches a resistance area. Here you can see the MACD is heading into resistance, okay, because the momentum is above the MACD. So that's how I gauge the strength of the trend. There is, if we are in a pullback, we are going higher, but it may turn around fairly soon, come back down. Once that happens, then the US CAD, let's go back to that. Once that happens, then the US CAD will turn around, and let me get my handy pen there. So, just wait for price to come down a little bit more and then watch for evidence to the upside. Okay, that's what we're looking for that pair. Now we get to the what's after the US CAD? You may ask, and that is the US Swiss franc. Okay, let's take a look. Wow, this pair is really gone. So this is kind of a surprise pair, but remember, the US Swiss franc is the best indicator for an opposite correlation to the Euro USD. It usually correlates in an opposite direction approximately 95 to 98% of the time. Okay, and that's how accurate this is. So if you want to know what Euro USD is doing, you can generally look at the US Swiss franc, and in this case, you can see the US Swiss franc is going much higher, really high. It's actually gone up from a low here 370 pips, and of course the Euro USD, having just said that it's an opposite correlation, should be going down, right? So let's go back to the Euro USD, and here we go. You can see Euro USD down, the US Swiss franc up. Okay, there you go. It's gone past the a resistance area. This resistance now turns into support. So we can expect again price to come back down. It could come back down to retest the support. You can watch for that, or it could just come back down a wee bit. But I believe it's going to come down a wee bit, a lot more, and then watch for buying evidence to the upside. So this pair definitely is trending higher. We are in a buyer's market. Wait for price to pull back. That would be my advice to you. And let's look at the open space. Once it goes higher, it's got a lot of room to the upside, at least another 200 to 300 pips. Okay, so great open space to the upside, but don't chase price right now. That's my advice. Price has gone up, 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 and of course it cannot keep going up, right? You've got to understand that. So wait for price to come back down, okay? Which means again waiting for price to come back down and then looking for that evidence to the upside, and that may mean past this previous swing high here, or a bullish candle off of support here or pin bar. There's all kinds of evidence you could be looking at. Okay, so with that said and done, now we're going to go to our last pair, the US Japanese yen, that also has been correlating in an opposite direction to the other major pairs. And this is another great example of the moving averages all in the correct order. This is, a lot of traders do not really bother looking at the moving averages, or they think that moving averages are lagging indicators, and they are, but they can give you a tremendous amount of clues. They can also give you confidence that price is heading in the right direction, in this case going higher. Here we have the 8 above the 21. Also, you can see um, pretty soon, price is going to be the moving averages will be above the 200. Okay, so here we don't have a lot of room to the upside. Here I see that price could actually turn around sooner than maybe the Swiss franc. But again, it's one of the pairs I can see that could turn around in a pullback, and then you can watch for buying evidence to the upside. We don't have a lot of open space here, so just beware that we are near resistance. So it could also go up much higher right now and then turn around, okay? And again, that's the theme for this week. Watch out for the turns at support or resistance. In this case, support. I'm sorry, move higher and a bounce back off resistance to the downside. Okay, so right now we are in a buyer's market. You can see the MACD is well above zero, and we are trending higher. But again, just be careful. And for this one, you may want to wait until price comes back down, looking for buying evidence to the upside. If price is going to break higher than this, don't get in right away, but you can take a buy trade above 111.20. So I'll put my crosshair on 111.20. Okay, it's about there. Okay, so um, I would, if you want to just, if price is going to go higher and you want to just place a trade right there, once price goes above 111.20, it most likely will go a little bit higher and maybe give you some pips in the short run. So anyways, there you go. Um, 4-hour chart, you can see here, I just wanted to switch really quickly. See, we're going sideways a wee bit, but price is going to be heading higher. We are in a buyer's market. The uptrend is certainly in the right order here, and the moving averages are all correct. You can see on the 4-hour chart, the moving averages are absolutely in the correct order. 8 above the 21, above the 50, above the 100, above the 200. This is called a well-defined trend. So all indication is for price to further go to the upside. Okay, so if you need any help, you need anything answered, if you want to contact me, you can do so anytime. Uh, I did mention my email address at the beginning of this presentation. So contact me and I'll be sure to get back to you. I've also got some other courses and some learning materials available if you're interested. So take care, everyone. Happy trading, and we will talk to you again soon. Bye for now.